What up, what up, what up, y'all? Once again, this is yours truly, MJ Worthmore, LegalConArtist.com. I want to say thank you once again for watching this video. I want to show you guys in this video right here how to identify areas of support and resistance, because you will find that with my trading style, with my trading strategy, that I'm all about maximum reward with minimal risk. That's my style of trading. That's the way I was taught to trade. That's the way my mentor trades. That's how all the great traders trade. And the reason why we're able to make excellent trades like that is because we understand a very simple and very key philosophy. Buy the floors and sell the ceilings. The ceilings are, of course, your areas of resistance. The floors are your area of support. Now, if you've never seen areas of support and resistance before on a price chart, I want to show you how to eyeball it. And then later on, within another, few videos, excuse me, I will show you guys the specific way that I'm even able to get precision entries and find out precision key levels, precision support and resistance. Like I'm talking sniper, like how the banks trade, okay? Because I want to teach you how to trade like an institutional trader and to stop trading like a retail trader, because the rule says that the statistics say that 90% of traders will blow their account within their first 90 days and their first 90 trades, but that's only 90% of traders. What about the other 10% that don't? Statistically, those 10% do very, very well for themselves. I'm a part of that. I'm actually part of the top 1% of traders now. Glory to God, right? But it's because we learned a very different education, right? And some of the fundamentals from the retail education does still apply. So that's one of the reasons why I want to show you this. But later on down the line, you will see that the education is a bit more advanced, and it's very, very, very different than what a lot of retail traders are taught. But I do want you to be able to begin to see just key areas of support and resistance, places where price reaches a high point, bounces off, and then turns around and goes down. Places where price reaches a low point, bounces off, turns around and goes up. I want to show you what that looks like just so you can eyeball it. And then later on, we'll get into those precision numbers and understanding bank levels, right? So for right now, I'm going to share my screen with you guys. We're going to go to a fresh chart, and I'm going to show you how I mark up areas of support and resistance and prove to you that these are areas that if you had got in for buys or sells in these areas, that they would have been very, very, very profitable for you. Okay, I'm going to dive in. I'm going to go ahead and share my screen with you right now. Awesome. So I'm going to get myself out of the way here. Okay, so we're looking at a pair that a lot of people trade. Okay, this is one of the most heavily traded pairs on the charts, and that is Euro USD. You see it's right up here, Euro USD. And I'm looking at currently the 8-hour chart. Now, you can do this on the 4-hour chart, which is what a lot of people recommend. You can go to the 4-hour chart, right? So you can just see ceilings and floors, or you can go to the daily chart, which is what a lot of other people recommend. I find that the 8-hour chart, in my opinion, is a happy medium. The only reason I've got the 8-hour chart is because I've got the pro version of TradingView and I was able to add it. But the 8-hour chart, in my opinion, is that happy medium between the two. One, because there's only 3 candles required to make a 24-hour day, right? So I can look and say, see that every three candles completed is a day. And also, it only takes 2 4-hour candles to make 1 8-hour. So that 1 8-hour candle lets me know what happened within, the 2 hours previous. But that's just a little bit of nuance that you'll find to be valuable later on. But for right now, what you want to do, and here I'll do a quick drawing for you. What you want to do is you want to find areas where you basically see little cone shapes, right? Or you see cone shapes going up like this, right? That signifies an area of resistance. When you see that there's a cone that looks like that, and then you want to see cone shapes like this, and that'll lock in, that'll help you signify areas of support. Now, the beautiful thing about it is if you were to draw a line above the top of that cone, that mountain peak, right, or draw a line directly underneath this valley, the depth of this valley, you should see in the past that that particular area serves as an area of support, and also an area of resistance, right? So let's see, where do we see something like that? Well, of course, it's dragging this over. Well, not dragging this over because this won't move the way we want it to. Let's see right here. Here's a good area right here. See, price came up, kind of made a cone shape, and then turned around, and it's been going down ever since. Okay, so we could identify that area as an area of resistance. Let's go back a little bit. Let's get rid of this here. And we see that right here, we've got an area where price has made a deep valley, right? That's an area that we could call support. As a matter of fact, we'll do it again. It actually proved itself right here. Right, that's an area that we could say is support. So what I would do is I would go over to my toolbox. I would go to the trend line tools, which is the second one down. I'm going to tap on the options button, click horizontal line. And let's say I want to draw my horizontal line right here. I'll just hover over the space, click my mouse, and there you have it. That is an area now for me of support, okay? And here is an area of resistance. So I'll do again, go back over. I'll get my horizontal line tool. Click there, boom. Now I've got an area of resistance as well, right? So now what I want to do is I want to find another area of support and resistance, okay? I want to have a few, just so you can get the idea of how price responds to these areas, and then you'll be able to see the trades, and you'll not only be able to see the trade, but you'll also be able to see the target, right? So let's see, we've got another area right here. Here's a nice deep one. Okay, right here. That's an area I will call of support. There's actually one right next to it, only because I've trained my eyes to see it. Right here. Right, that's a good area of support. Let's go back a little further. Let's see if we can find some others. Here's one that's interesting. I'll actually highlight why. Okay, we have an area of light resistance right here. Okay. Now, check this out. Here's what I want to do. I want to draw those lines so that you can see how price responds to those lines, to those areas. We call the response to those lines, as well as just the overall interaction of what's happening on the charts. We call that price action. Okay. So what I want to do, of course, go back over, get my horizontal line tool. I'll go ahead and draw that line right here. That's a nice area for me. And I'll also hit Alt-H and draw that line again. Bang, okay? So now I want to get rid of these arrows here. And of course, you don't want to just draw lines all over the place. You want to find, areas where there's been significant reversal. Okay? Now, here's how you confirm this. You see this area right here, this line has acted as a resistance to this price area. So we're going to draw a box over this. It's acted as a resistance to that price area. What we want to do to really confirm this line as a major area is to see if this line not only acted as a ceiling here, but maybe acted as a floor once before in the past. And as we see, it has, right? So we know that this is a major key area, right? Look at how it's acted as a floor before here in the past. Struggling to break below and stay below, right? So we know that this line here, this line is 1.12301. We know that this is a major area where we should be paying attention to price action, because we could be in for a major reversal, which has a lot of upside potential, right? Even if it's on a sell, you got a lot of upside potential, because as long as you're making money, you want an upside. You smell me? Anyway, let's go back in, right? So we know that this is a major area, okay? That confirms this line here. Now, this line right here, let's see if there's any confirmation for this in the past. We see that this line acts as a floor right now. Let's go back in the past and see if there's ever been a time when 1.07672 has been a ceiling. Let's go back in the past. Let's see. Uh-oh, there it is. Confirmation right there. Check it. Price has acted as a ceiling, or this area has acted as a ceiling before to price. Okay? It's acting as a floor right here. All I'm doing is drawing my box to confirm that this is a major area that I need to pay attention to, because there's a lot of rewards if price bounces off of this area and goes to the next key area, right? So bang, now we see these lines are confirmed, right? We see, of course, let's look at this one again. We see that this line is acting as an area of resistance. It's acting as a ceiling, okay? Acting as a ceiling here, then it gets broken above. Watch this, here's something really cool. A general rule of thumb is once an area gets broken as a ceiling, it tends to get retested as a floor. As you see, it acts as a ceiling right here, but it also acts as a floor right here. So when you see this break above, I mean, you can automatically as a trader start thinking to yourself, okay, at some point in time, this area is going to get retested, because that's a general rule of thumb. So let's say if you saw price action up here at this line and you said, oh man, this is an area where, you know, price typically bounces off, right? This is an area where price has been a resistance. Let's just say if you got in for a trade right here, you got in for a sell, because again, we sell the ceiling. Let's say you got in for a sell here in this area, your target would be all the way down here, right? And from here, so from 1.24310 all the way down to 1.12301, I mean, that's a crazy amount of pips. Like that's over 12, that's like 1,200 pips right there. Seriously, that's 1,200 pips. And if you're trading with a standard lot where you're getting paid, you know, $10 a pip, that's 12 grand. Okay, like it's that serious, y'all. It's a lot of money in these markets. Okay, so what we want to do again is just see the places where price has responded and bounced. Okay, and we want to mark those areas off. I'm actually want to mark this area off too, because this could be considered a target if you were to get in for a sell from the top, right? How cool is that? So essentially what we want to do, or what we want to have done, is found areas that price has come to and rejected and turned around and gone in the opposite direction. Now, let me show you guys how you could have used this on some potential trades, right? So that way you could have made a lot of money. Okay, check this out. So let's deal with this area right here, 1.6202. So first and foremost, would we have marked that off as an area of support or resistance before? Yes, we would have, right? In order to get a good idea, write this down if you're a note taker. In order to get a good idea of what's going to happen in the future, double check and see what has happened in the past, because history has a tendency to repeat itself, and price has a memory. I teach my mentees all the time, price does not have emotions. It doesn't care about how you feel in the market. Price doesn't have emotions, but it does have memory. And it typically likes to revisit places that it has once left before. Okay, so write that down. If you need to, rewind this video, watch that part again, write it down over and over and over again, read it, write it, recite it. I'm telling you, that's going to make you a lot of money in and of itself. Okay, so in order to get a good idea of what could potentially happen in the future, you got to check and see what has happened in the past. So by checking this area in the past, you would see, hey, this has been an area of support before. It's been an area of support. Well, I'm sorry, support. Then it turned resistance, right? And then it's been an area of support again, resistance again. So we know that this is a key area. This is an area that's been resistance. Okay. So now, let's say We were here, right? Let's say we were in this area looking for a trade, okay? So we have our area of support and resistance. We have our targets because we've gone back into the past to see where these places may have been, okay? So what we're looking for now is we're looking for price action, and we're looking for two things. And this is something that I teach in depth later on in some of my other videos, but this is going to help you, right? When price gets to a major key level, you are looking for two things to determine if a reversal is imminent, or either a major retracement or a reversal was imminent, okay? Here's what you're looking for. First thing is you're looking for a revelation candle that lets you know that the end of the trend is either near or it's here. You're looking for a revelation candle. The second thing you're looking for, in my opinion, is a confirmation candle, right? You're looking for a candle that confirms your thinking, right? And even when you get a great revelation candle and a great confirmation candle, bankers can still push price in the opposing direction and still stop you out if you have your stop loss too tight. We'll talk about that in depth later on. But for right now, I just want you to understand the risk to reward potential. The rewards are way better when you wait and you study price action at a particular area, get the revelation candle, and then get the confirmation candle, okay? So looking here at this line, you see price was on a downtrend. It came to this support, this floor. What's our philosophy? Sell the ceilings, buy the floor. So what you're doing right now is you're waiting to see where the opportunity is to buy this floor, okay? So we've got a downtrend here, and then we have this candle right here. This is what I like to call a revelation candle. It's a doji. It's an indecision candle. If you don't know about dojis and indecision candles, then you realistically need to take advantage of reading the Candlestick Bible. It is one of the best books I've ever read. I study it all the time. I mean, it's an ebook, and I got it printed out, and I got it bound at FedEx. It cost me like $40 to do that. It's the best $40 I ever spent, because that book has made me thousands upon thousands upon thousands of dollars. So with that said, what you want to do is really take that seriously and go download the book. If you don't have the book and you don't want to go spend, $40 or $50 to get it delivered to you, you can download it. And if you don't want to go the more invested route and print it out or get it printed, at a local print shop and get it bound or anything like that, you can literally just read the ebook. I'll give it to you absolutely free. There's going to be a link somewhere around here on this video, underneath this video, somewhere where you can literally just shoot me a text to my text line, and I will text you a link so that way you can download the book completely free. I just want to give it to you. I want to give you that value, give you that sauce, because I'm telling you, it is well worth reading and studying. So that said, again, what I'm looking for is two things. I'm looking for a revelation candle and a confirmation candle. I'm looking for a specific pattern, right? Because another one of my philosophy is trade the stars, okay? I like the evening star pattern and the morning star pattern a whole lot, because those are the patterns that give me really, really, really good entries, with minimal drawdown, right? So check this out. First and foremost, here is the revelation candle. It's a doji, right? Look at the anatomy of this candle. Price opens up right here, and it either went up first and then came back down and closed in the exact same spot, or it opened up, came down, went up. More than likely opened up, went up, came down, and got pushed back up. You know what I mean? Either way it goes, there was indecision. Price pushed up, pushed back down, and closed at the exact same point, or at least very, very close to its entry point. As a matter of fact, price, just looking at my trading view, price opened up at 16374. It closed at 16372. Literally two pippets of change, right? So that lets you know that there's a lot of tug of war here. That's called a doji. It's an indecision candle. That lets me know that there could be a potential reversal coming, okay? That's the revelation candle. I actually get a second revelation candle right here with this. This candle right here is called a hammer, right? And a hammer, if you think about the anatomy of the candle, right? The candle opens up right here. It pushes down, right? Comes back to this area, but then pushes back up and closes a little bit above where it opened up. But all of this long body here, this is the candle wick. You know about candlestick formation. You know about that from reading my book or reading my ebook about the anatomy of the candle. So you know that this is all wick, right? And you've got that mallet shaped head there. That's called a hammer. That's another revelation candle, right? That's letting me know that there's not as much indecision, but there's actually some seller exhaustion and the buyers are taking over. It's when this candle comes in right here and I see how this candle closed and I say, okay, cool. That's the one. That's the one. That's where I'm going to get in, because this candle right here actually completes a formation of a pattern called the morning star. And you'll see the morning star when you study the Candlestick Bible. So again, click on the link around this video. Let me send it to you as a text, download it right to your phone. You can email it to yourself, whatever the case is, but you absolutely need this book if you don't have it. You absolutely need it. It's going to change your life and it's going to make you more money than you could have imagined, okay? So that said, that's where I would have made my entry. I would have made a buy, and buying is called going long. And my targets would have been way up here, my pre-established ceilings, right? You see how far that is up there? Okay, so I'm gonna show you, here's the entry, right? Now, of course, it would have taken some time to fill this. This would have been a major swing trade, but I just want to show you that this was a trade that could have absolutely played out in your favor. Doesn't matter how long it took to close out, it would have crushed your targets. And if you were trading with a good enough lot size, it would have paid you very well for your patience, okay? So just to see that potential, I'll go over here to my toolbar again, my toolbox, prediction and measurement tools. I'll click on that. I'm going long, right? And I'm going long from right here. I see the candle. I'm going to drag this way over because it took a little while for us to get to our target points, right? But check this out. Drag it over some more. And this is a sniper entry, y'all. I'm telling you, because literally after just a few candlesticks of being tried, the rest is all profit. I'm gonna show you. Look at this. Way up, I feel blessed. Check it. Look at that. You see where our entry is? Now, my stop loss, I typically like to give myself on swing trades. I typically like to make my decisions on major key levels. Like this one is the major key level. I like to make my decisions as close to the key level as possible because I want to give myself enough swing room just in case, you know, the opposing party tries to wick me out, right? So this is my area right here. This is the area that I would, you know, essentially be looking for a buy from. I want to give myself about a 20 to 25, realistically like a 25 pip stop loss, right? I'm going to give myself a 25 pip stop loss from this major area. So if this area is 1.16202, then if I gave myself a 25 pip stop loss, I'm actually looking at 1.15. I'm not mathing well. Minus 20, be 16 flat. 1.1595, something like that. 195. I'm actually going to pull out my calculator. This proves that you don't have to be extraordinary at math in order to make a lot of money trading. You just need to understand the philosophy behind it. So 1.16202 minus, I want to find out what 25 pips is. Awesome. 0.00250. Awesome. So my stop loss will be 1.15952. Perfect. 1.15952. Actually, I'm going to keep that in the video because I want y'all to see. Like, this dude pulled his camera out. Yes, I sure did. I pulled out my phone, pulled out my cell phone, and I actually did the math right then and there on the spot. So 1.15952. That's where I'll put my stop loss. 1.15952. Okay, that's a 25 pip stop loss. And as you see, they tried me as a matter of fact, right? Like I made my entry here. I went into profit. Here, they took all the profits away, tried to scare me, and they pushed price all the way down here. I would not have moved my stop loss. I typically try not to move my stop loss until I'm at least halfway to my target. Keep that forever. I typically don't move my stop loss until I'm at least halfway to my target. And that's when I bring my stop loss to a break even, right? So I give myself a 25 pip stop loss. They reached for me, but they didn't get me, right? And actually, I should have made my stop loss 25 pips. I did. I made my stop loss 25 pips from the level. Perfect. So our total risk to reward, let's see how many pips we were risking. We risked 58.6 pips, right? We risked from our entry. From our entry, we risked a total of 58.6 pips, okay? But our reward, if you look at that, if we hit our target, our reward was 423.9 pips, y'all. Over 400 pips, okay? And as you see, when we made our entry, price went to, I would call this a take profit zone, right? It went through this take profit zone, shot through it, and it kept going up and went all the way to the ceiling, all the way up there, right? It hit the zone, hit the area, you made your money, okay? That's the beautiful thing about learning how to trade off of key levels. That's the reason why you want to learn support and resistance, because when you learn how to trade this thing, I mean, look at that risk to reward. The risk to reward here is 1 to 12. 1 to 12 risk to reward. That's a crazy trade, right? Now, let's talk about the time it took to complete it, okay? Let's just be fair, okay? So this trade began November 3rd, 2020. It hit your target, what day was that? Hit your target January 5th of 2021. So November 3rd to January 5th, this trade took 8 weeks to complete. Took 8 weeks. Now I want to put this in perspective for you, right? And I'm sorry, I actually said that wrong. The take profit was not 400 pips away. It was actually 710 pips away. 710 pips. Look at it right up here. Right? That's crazy. That's crazy. 710.5 pips, y'all. Beautiful thing about that is, if you were trading with, let's say, $10 a pip, which is a standard lot, it was $7,100. Imagine making one trade and 8 weeks later, you got an extra $7,000. Are you kidding me? What would you do with an extra $7 grand every 2 months? It's an extra $3,500 a month, without you having to work any extra hours, without you having to, do overtime at the job, without you having to call a million people, without you having to, try to sign somebody up into your opportunity. There's nothing wrong with any of those things, because I've done it all and I still have a great love and appreciation for all of those things. But just think about it, like, this is you not working hard. This is your money working for you. This is your money making money for you. 710 pips? Are you kidding me? 710 pips. And if you were trading with a standard lot, that is $7,100. Now, imagine if you were trading with 2 standard lots or 5 standard lots. That's wild, right? That's the kind of potential. And that's the reason why, again, you want to understand support and resistance, buying the floors and selling the ceilings, okay? Now, here's the beautiful thing. Because somebody else would have said, well, dang, MJ, once it hits the ceiling, what do you do after that? The same exact thing. You smell me. So looking at this trade right here, this trade completed, okay? This trade completed right here. Boom, got your money, you out of there, you good. What are we going to look for now? Same exact thing. We're going to look for a revelation candle. We're going to look for some kind of a doji. Then we're going to look for a confirmation candle to let us know what's the best possible entry with minimal drawdown, okay? So here you go. This candle right here, I'm going to zoom in for you. This candle right here, this is called a hanging man. It's another doji, hanging man. A hanging man at resistance lets you know, hey, the reversal's coming. The reversal's probably coming. Then you got this candle right here. This is actually in regards to the body of the candle. Some people could call this a bearish engulfing. I personally wouldn't have taken the trade on this one. That wasn't enough of confirmation for me. But this candle right here, oh yeah. This is the candle right here where I would have taken my entry. Now, with that said, my stop loss would have been a little deeper, but if you look at how it plays out, the drawdown is minimal, okay? So here is where I would have gone short, okay? And I'll say this and then I'll end this video because I'm pretty sure you guys are ready to like, okay, MJ, I'm ready to go kill the charts. Like you literally just made me $1 million, MJ. And I hope I did. I really hope I did because I want you to cook these charts. I want you to make big money, okay? Trading is simple if you just follow simple things that work, okay? Here we go. So boom. We're going short now because when you sell, you're going short. When you buy, you're going long. Going short. You're going short from the entry. I always make, write this down if you're taking notes. I always make my entries at the end of a candle. Always, right? That's the reason why, and you'll see how I set up my trading view in another video. That's the reason why I'll have the countdown going because I want to see what time does this candle close. So that way I can be ready to smack the button if the candle completes and it completes a formation pattern that I like to trade off of, right? So I would have seen this and I said, oh yeah, this is a phenomenal entry. I'm gonna go ahead and I'm gonna make this move right here. I'm gonna go short from right here, okay? Now, my stop loss would have had to have been, again, 25 pips above 1.23446. 25 pips would have taken it to 1.23696, okay? So here we go, 1.23696, that's where I would put my stop loss, 1.23696. Okay, that's where I would have made my stop. See, my stop loss is up there, okay? Now, watch how the risk to reward changes, because right now, it's not, of course, it's only showing not even a one-to-one risk reward. If we were to sell this thing down to the floors, let's go ahead and see how price has been doing so far. Check it out. Let's drag it all the way out. Okay. Look at that. You guys seeing this? I hope you're seeing it. I hope you're seeing this. Look. Crazy, right? I mean, and granted, it hasn't hit target yet, but look how deep it is in profit, y'all. Look how deep that is in profit. And that's a 1-to-6 risk reward ratio. That is a crazy good risk to reward ratio. That means you got to be wrong. If you trade with the exact same parameters each time, you got to be wrong 6 times in a row. Like, is no way if you take this simple philosophy and keep your parameters similar, like I don't think anybody in the world who trades with this style is going to lose six trades in a row. It's not going to happen, right? But let's just do the math on that. With risk to reward, let's say if your total risk, because right here the total risk, how many pips was it from our entry? Okay, the total risk was 100 pips, right? And let's just say you are trading with a lot size where you get paid $1 a pip, or you lose $1 a pip. Here, if it hits your stop loss, you lose 101 bucks and 80 cents, so 102 bucks, right? But the reward all the way down here, 645 bucks, right? $645 if you're trading with $1 a pip. Okay, so it's like, hey, if you lose 100. If you win 600. Let's say you took 2 of these trades with the exact same parameters. First trade you lose $100. The second trade you take, let's say, matter of fact, let's say you lose that one too, you lose another $100. But then the third trade you take with the exact same parameters, that when you win and you earn $600, that pays you back the $200 that you lost, and you still got $400 in profit. That is how you want to trade. You understand? And you do that by buying ceilings and selling floors. Selling ceilings, buying floors. See, I said it backwards. Wanted to make sure you're paying attention. Selling ceilings and buying floors. That is how you make money in the Forex market. And I feel like this trade is actually definitely going to go down to our target here of 1.16202. I'm pretty confident that it is. But if it hasn't, I mean, realistically speaking, you could move your stop loss right here, right now. And like you can move your stop loss really deep in profits. You actually move your stop loss right here. It's called trailing a stop loss. Move your stop loss right here. So that way, if it did reverse, if it didn't come all the way to target, if it did reverse, you could actually get stopped out and still have made $466 if you were trading with $1 a pip. If you were trading with a standard lot, which is $10 a pip, then you still would have made, 4,600 bucks, 4,660. Come on, man. Like this is not rocket science, y'all. I'm telling you. This is really, really how you want to trade. This is how you will make your daily bread and your weekly bread and supplement your income and grow your account to where as though you can catch a 10 pip move per day, and a 10 pip move can pay all your bills. I'm a living witness to it. Okay. So hopefully you found some value in this video with understanding how I draw support and resistance and the reason why you want to be able to draw major support and resistance, so that way you can understand when you should be looking for a buy and when you should be looking for a sell. And not only just when you should be looking for a buy or a sell, but the targets that you go to, okay? Because that, my friends, is how you will cook these charts, and that is how you become a legal con artist. That's all I want for you. I want you to become a legal con artist so you can legally rob the banks, because that's where all the money is. Forex is your ability to do that. Hope you found some value in this video, y'all. Until the next video, take care, be blessed. Text me. Click on that text link so I can text you and send you that book. You need it. I promise you. All right. Talk to y'all soon. Peace.